Today, we are looking at the idea of money printing and how it's really snuck up onto us in 2025. Many people didn't realize it's been happening for about the last year, and it's not coming from the central bank. And therefore, it's worth looking at in today's video how that money printing is leading to asset bubbles, all the way from real estate, the stock market, crypto. We are creating bubbles everywhere. Think of it as the dot-com bubble bust in 2000, tech stock bubble, merged together with the real estate bubble in 2007. Getting started, we need a reliable yardstick to tell us how much money supply is getting generated. And we're quite lucky that there's something called the money supply measured by the central bank throughout America. Now, specifically, we're looking at the M2 money supply on this graph, and this measures anything that is money, like cash, but also near money, things that can be converted to cash in almost an instant. So things like cash in your bank account, money market securities which mimic cash, and also short-term deposits. All of that money in America is currently sitting at $22 trillion in assets. Now, is that number huge? 22 trillion sounds like a lot, but it's kind of meaningless. What we care about is the rate of change. How is that amount of cash changing year to year? So we are going to change that chart now to a year-over-year change in that money supply. And you can see here throughout most time periods in history, we hover around 5% growth in money supply per year. And that's why we see throughout the economy, if you add up all of the different costs and assets from real estate prices, stock prices, but also things like consumer goods, food. If you add up the cost of everything in the economy, each year it would increase by about 5%. And that is no coincidence. If you have an increase in total money, but there's no increase in the amount of stuff in the entire planet, over time, you're going to see the price of things increase at the same rate as your money supply growth. The big issue with this, however, was really in 2020 and 2021. So many things just went out of the window. So one of the mistakes that I believe the central banks and also the big banks and governments made is they relied too much on money printing, thinking that, look, we've printed money in the past and it hasn't really created issues. Well, let's just multiply that by 5. And that's what they did. They increased the money supply for about 2 years at a 25% per year clip. That is way outpacing any sort of money printing we've really seen throughout history. And that goes all the way back to World War II, World War I. The government did not rely on money printing. What it did is it borrowed money from investors and from the public by selling Patriot bonds, American bonds. They got the money directly from people. They did not print to this extreme. That was devastating, to say the least, for people that did not own assets. If you were lucky enough to own a house at that time, well, great, that house went up 50% at least. If you had a stock portfolio for about 2 years, you were making 30% per year on your money. Things were going pretty good if you were lucky enough to have that. But for the average person out there, they just don't have much spare cash. They did not have a bunch of money invested in stocks. Maybe younger people, they're doing a bit better like that, getting involved with investing. That's created a clear distinction in society. You have the haves who have all the property, the winners in life. They can go out and spend as much money as they want going out on a Friday, Saturday night. Don't even need to blink at a $300 dinner bill. And then you kind of have everyone else that is really living paycheck to paycheck. We're getting a much bigger divide in society, and a bunch of that is due to the money printing we saw during COVID. There is a small piece of good news. People came to their senses. The central bank, not really the government, but central bank and commercial banks thought they needed to tighten lending standards. Inflation was getting out of control. It was actually hurting everyday people. And they tried to stamp that out by reducing the money supply. And we saw that really come into effect from 2022, start of that year, through to about October of 2023. About a year and a half of really responsible management. And you could argue this did work. We saw the inflation rate drop from 9.1% down to around 2.5%, and even stock portfolios took a hit or just came down to more acceptable valuations. And you saw companies like Facebook, Meta drop about 75% in about 9 months. If we had the balls to continue on that path for even just another 12 months, if we just force the economy to go through a shallow recession, economies need that natural process. You need to get rid of the dead wood, cut out the companies that just need to go bankrupt, get rid of them out of the economy, and then we can get back to a more healthier society. Instead, we just went straight back to money printing around the end of 2023, and lo and behold, we have real estate prices out of control. They probably should have dropped 20% after 2021. They just stayed the same. Stock portfolios are up to all-time high prices. Just diving deep into one of those bubbles, I'm going to talk here about real estate because most people can relate and use that. So here I've got a chart looking at the home price, and that would be median, divided by the median household income. So, back in the 70s, 60s, that was one person's income. Well, now we have two, but even still, we cannot afford housing. Two people working can't even beat one dude per household in the 1960s. If we divided the average house price by the total income in a family, we are looking at a ratio of 7.4. That is actually worse than the peak of the housing bubble, in the 07 GFC time period. That was at a peak of about 6.8 in terms of that ratio. But just 5 years ago, that ratio was 5.5. We have increased by about 35% since 2020. And that situation looks like it's going to continue getting worse because that money printer has just been turned back on. And we can see the source of this money printing if I overlay the year-over-year increase in the total loans made at commercial banks. You would see in the last couple years, the percent increase or the percent change is almost the exact same. That's a really strong indicator showing the money supply is coming from banks making more loans. It's not the central bank that's printing a ton of money, maybe a couple trillion in the last few years. It's banks going out there and giving people credit cards, giving people car loans, mortgages. Every single time you make a mortgage loan, for example, you give a young family $500,000 to spend in the economy to buy that house. All you just did is increase the total money supply in America by $500,000. And all of that is good and well and stimulates the economy, increases home prices even further, blows up that bubble. As long as people can continue paying back those mortgages, then everything is okay. We can all benefit from this bubble. I could make a bunch of videos right now explaining how this bubble blowing process is starting to get risky, but I'll just make a really simple analogy to help understand where we are right now. So really, when we're building up an economy from scratch, say, March of 2020, the economy is in the doghouse. All we're trying to do is build up a fire, build up all the firewood, that's getting all of the laws and regulations in check, lighting a bit of a fire, that might be a bit of stimulus from a central bank, a little bit of a spark, getting that fire going. And what we tend to do by the end of an economic cycle is all of us are bored. Like getting 20% gains in your stock portfolio, that's not really good enough. I want my house to keep going up 10% per year forever. I need to keep this fire going. So we tend to pour petrol on it, or gasoline, whatever, pour it on there, and we want to see a giant flame. We want to get that stimulus. And that's where we sit today. The big banks have poured on gasoline onto the fire, trying to get this baby going. And at a certain point, you just pour on too much stimulus, and the whole thing just blows up. Where is that moment? Where do we see this whole thing blowing up? It's when people can no longer pay back those loans, and you start to see things like corporations, their revenue and profit growth starts to slow down. When is that going to happen? Well, it's not quite yet. We're not really seeing the evidence of the big crisis happen right now. It seems to be off in the distance. We have the ingredients to this disaster ready. You can make of that what you will. You can try and make a bunch of money in the next 6 to 12 months. That's up to you. But all I'm trying to say here is this money stimulation is causing the bubble to grow even more. So comment down below what you're going to do. Are you going to profit before the bubble pops, or are you just going to wait with some cash on the sideline? I want to thank my YouTube members who help support the channel. Thanks for your time, guys. See you next time. Bye.